dial, 1380 on the AM dial. And we also upload the show to Spotify about an hour after the broadcast is over. Or you can listen to us on WNRI.com live, and there are no pesky commercials or fees that you have to pay to listen to us on the World Wide Web. That's WNRI.com. Just scroll down the page a little bit and you can click Listen Live, and then you can hear about us. You can hear what we have to say. So, a little about me. If you're tuning in for the first time, I am a realtor. I'm licensed to work with residential and commercial buyers and sellers in Rhode Island and Massachusetts. And I've been working at RE/MAX Preferred for about 12 years. I'm full-time, full service. This is what I do. I love my job, helping folks achieve their dreams in real estate, whether it's buying or selling. Little bit of housekeeping. I want to thank our sponsors. Of course, we have Compass Title and Escrow, Anthony Betancourt and his crew over there. They do a fantastic job taking care of our clients. They're actually handling a closing for us tomorrow. And they're very good about dealing with any surprises that pop up, or if there are any loose ends in the transaction. You know, they're very, they identify these challenges ahead of time, and they help resolve the issues so it doesn't delay the closing. Also, we have, of course, George Metz, G-Metz Moving and Storage. G-Metz, the best move you'll ever make, #1 mover in southern New England. You can get a price or schedule a move on their website, gmetzmoving.com. That's G as in George, M as in Michael, E as in Edward, T as in Tom, Z as in Zebra, moving.com. Check them out, gmetzmoving.com. I have had them move me. I've had them move my family. They've moved my parents twice. And of course, I've referred all of my clients to them. That's G Metz Moving, George Metz, great guy, and he runs a great company over there. And of course, Vern Rainville, Vern, public insurance adjuster extraordinaire, as I like to say. He's a licensed insurance adjuster, licensed by the state of Rhode Island. He can help you. If you had a claim that's as much as 2 years ago, he may be able to help you retrieve monies that you may be owed from your insurance company. You want to call him as soon as possible, but if you haven't, you can give him a call. His number is real easy, 484-300-8495. That's 484-300-8495. Vern Rainville, public insurance adjuster. He works for you, the property owner, not the insurance company. That's Vern Rainville. So, thank you for supporting our sponsors. So I work at a company called RE/MAX Preferred. We have a couple of nice listings I want to share with you. We have actually a commercial listing not far from here, right across the border in Blackstone. It is an automotive, it's a tire repair facility, has 3 overhead doors, plenty of storage, has a mezzanine level to store merchandise or have an office. It's a cement block building. It's a corner lot, and great opportunity, $560,000. If you're paying rent, you're going to be paying more than what your mortgage payment would be on this property. So if you have or know anyone who's looking for a commercial property, give me a call, 401-409-5030. 401-409-5030. We have another property. This is a pocket listing. It's not listed in MLS. The seller does not want lots of exposure. It's a mixed-use property. It's in North Providence, has 3 residential units and then 2 retail units. It's a separate building. It's a cement block building. And then abutting that, there is a parking lot which you could build another structure on. So there's definitely upside potential there. This is $649,000. Again, this is in North Providence. It's on a great road. If you're interested, or you know someone who may be interested in redeveloping this property, tremendous upside potential here. 401-409-5030. And then, of course, we have a listing, Colonial in Cranston. $535,000. It is, $435,000. It is 3-bed, 1-bath. If you're interested in that, please give me a call, 401-409-5030. I want to do a quick announcement, too. We are going to be starting a new feature on the Joe Luca Real Estate Show in the next couple of months, where we're going to have an attorney on. You can ask my attorney, whether it's a divorce attorney, a corporate attorney, whatever it may be. We'll have the attorney on, open everything up for phone calls, so you can get some free legal advice over the phone or over the radio. You just have to give us a call, and we'll be releasing more information on that as we get closer to that rollout date. But that's something to keep your eyes and ears peeled for that. That being said, I'm very proud we have another awesome guest. We've been very blessed with our guests the past few weeks. This week we have a friend of mine, an unbelievable professional, has a stellar reputation in the industry, Joe Baptista, Anchor Financial. I'm going to turn the camera around on Joe now. Joe, thank you very much for joining the Joe Luca Real Estate Show.
Thank you, Joe. It's a pleasure to be here. I think there we go.
There
Okay.
you go.
Yeah, I hear myself enough. But,
Right.
Thank you, Joe. Pleasure to be here. Thank you for having me here today.
Sure. So, Joe, tell our listeners and our viewers online a little bit about the company, areas of specialization. I know you guys, your service is second to none. I can say that from personal experience. Every time we've worked with you guys, it's whoever we're working with, great service.
Great. We appreciate that, and that's something we work very hard for. And it doesn't happen by accident, right?
Right.
You know that as well, Joe.
Yeah.
And I'll give you the same kudos working with you, the way that you care for the customer, the way that you watch over the entire transaction. You get it. And
Right.
sometimes, people in the transaction, they don't help as much as
Right.
they should, and it's nice when we have everybody that has the same common goal.
Yep.
And that's to see the customer succeed, right? That's to
Exactly.
see the borrower succeed and help them along the way. So yeah.
And I want to point out too that you've been in the business long enough that, like me, you have witnessed and weathered a couple of business cycles. So the upturns, the downturns, and everything in between. So
Yes.
you understand the challenges that not only you go through as a business owner, but then also what the consumers and the other real estate professionals involved are going through.
That's exactly right. We live it with our clients. And we've seen quite a few different environments along the way, haven't we, John?
Yeah,
I'll tell
yeah.
you. And it's but what goes up must come down, right?
Right, yeah.
And so things change, and you just have to make sure you're always on top of things, and make sure you're giving the proper advice. And when it comes to mortgages and financing and people's houses, it's a big thing. It's not something that we can take for granted.
Right.
So it's important that we make sure that people understand their payments, right? They understand there's cost and then there's payments, and that's
Right.
we want to make sure they understand both and
Yep.
know what you're getting into. Surprises are good for birthdays, not for
Right.
real estate, Joe.
Exactly.
So,
Exactly.
yeah.
I always say that it's like surprises are never good when it comes to a real estate transaction.
That's
I
exactly
have
it.
never
Yeah.
experienced a good surprise.
A good sur-
a good surprise would be like the owner closes on the house and then finds like $1 million buried in the basement or something like that. But that's never happened. So.
I'm still looking for that one.
Yeah,
But
yeah.
But no, so it's just a matter of being prepared and being a real professional and
Right.
and understanding the market and working also with true professionals, like you said. One of your sponsors, Anthony Betancourt,
Yep.
second to none. I mean,
Yeah.
they do a fantastic job.
Exactly.
So teaming yourself up, understanding the process, educating yourself about
Right.
the process, right?
Yeah.
Knowledge is power. I always say
Yeah,
it.
that's
And,
right.
So we're gonna, at Anchor Financial, we've been around for a while now. Like you alluded to, we're coming on a 25th year. Can you believe that, Joe?
Holy crap.
25 years. It's,
God bless. That's fantastic.
I feel like I've got the miles on me now.
Yeah. No, well, and that's a good thing because there are, who was I talking to the other day? And it was like, back in the heyday, there was so many mortgage companies, and they were making $300,000 a month, but they were spending $325,000 a month.
Yeah, no, it was an environment where it was like the Wild West,
Yeah.
And there weren't the licensing requirements that really there should have been. I
Yeah.
mean, we all know it now.
Right.
And it went from where there were 350 mortgage companies just in little old Rhode Island, and now there's like 35 of us left.
Yeah.
And what's
And even that, I'm surprised there's that many. Wow.
Still even that, right?
Yeah.
I haven't looked at that count lately, Joe.
Yeah.
So it could be a little bit lower. I'll tell you that.
I have to say, what I have noticed is, folks, it's a seller's market, so a lot of buyers, they put in lots of offers, and there aren't lots of transactions. Even though we have, the listings, the number of listings is increasing, the number of transactions is still down significantly from last year. So a lot of my colleagues and lenders, loan officers, their income can be down 30, 40, sometimes 50% from last year. And so that can be challenging. So I've observed my colleagues bouncing around from one company to the other, some leaving the business, not many, not surprisingly, but I've seen a lot of loan officers also bouncing from one company to the other. And, I just have this thing. It's like, if you're changing, loan companies, the company that you work for as a loan officer, every 6, 12, 18 months, what's going on?
What's going on there? Yeah.
You know,
It's something that we're really proud of,
Yeah.
that we've been able to maintain this structure, and I have done it by myself.
Right.
My wife Kim is
Yep.
we're talking. She's a big part of the our success, and
Yeah.
she's the backbone behind all this, and she
Yeah.
lets me put in the hours and the work that's necessary. And we've got 3 wonderful daughters too, and
Yep.
to be able to do that and to do what it takes to run a business
Right.
is just a lot. And
Yeah.
every day I say every day you just got to do your best.
Yeah.
And you got to just make sure you're getting back to people, right? Communication. That's my number one thing.
Yeah,
If,
yeah.
if anyone said, what's kept you, going all these years, it's just
Yeah.
communication, staying in front of things, and just being honest, right?
Yeah.
And just no BS, with
That-
I think
that's
that's the
key.
easiest part.
Oh my gosh,
For me,
yeah.
it's the easiest part.
Yeah.
Just be straightforward,
Yeah, if
Cut out
there's
all the crap.
if there's bad news, let us know as soon as possible, so then we can try and figure something out.
Exactly. If there's bad news, you're much better off to get it, a week or 2 in advance than, the day before the class. I hear these stories. Oh, I found out last night I can't close today. I'm like, what is going on? How does that even happen?
Right.
So, just you got to treat people like you want to be treated, right?
Right.
And and if it's going to be bad news, tell me. Just
We're all
rip the
we're all
Band-Aid
adults,
off.
exactly.
That's it. And find out a solution.
Yeah.
Come up with a way to get around it. If you
Yeah.
can.
Yep.
And find out those those challenges up front too. Do your due diligence as a lender
Mm-hmm.
for our realtor partners. We don't want to be sending people out pre-approved that are
Right.
in the end not going to be able to finish the
Yeah.
job.
Yeah,
It just,
and
it's
that's
no good.
something. Yeah, and I say this. I've been blessed. I've had more listings than buyer transactions this year, and when you receive offers, I immediately look at who is the buyer's agent,
Sure.
and then who is the loan officer that gave the pre-approval. Because you have to prioritize, and being the professional, I have to communicate to my client, the seller. All right, this offer may seem like it's better, but I just want to point out, A, B, C, and D, which may, weigh heavily or should weigh heavily on your consideration,
Important, yeah.
the decision.
It's not just the price, right?
Right.
It's the terms
Yeah.
of the offer, right? Yeah. Are you allowing, are there closing cost credits? Are you asking for closing cost credits where, in this environment where it's more of a seller's market, it's hard to be asking for those things.
Right.
You've got to be willing to, if you want the house, I always say,
Right.
if you want the house,
Exactly.
you've got to be willing to go the extra mile. And I'm not saying to, pay $1 million over the or waive every single thing in the world, but
Right.
just be creative with your offers. Work with a good realtor like
Mm-hmm.
Joe, someone that's going to say, hey, maybe you want to stay in the home after we close for 30 days.
Right.
I've seen things like
Exactly.
this.
Those
right.
things make a big difference.
They're good tools. They're good tools. So working with professionals, someone
Mm-hmm.
that's going to, help you to structure your offer the right way,
Yeah.
it goes a long way.
Yeah, and and the other thing too, folks, is now the buyer's compensation, the buyer's agent's compensation, it's many times may not be paid for by the seller, by the listing side. So the buyer's agent should have an exclusive buyer agreement with his or her buyer, and that should stipulate what they're being compensated, how much they're going to be compensated. And if you can submit an offer without having to ask the seller to pay to compensate the buyer's side, that's a better offer. And because the seller is looking like, okay, what's my net? With this offer, I'm netting this. With that offer, I'm netting that. That's all they're looking at. So as buyers, if you definitely should be signing an exclusive buyer agreement, and don't be dismayed when your buyer's agent asks you to pay whatever the percent is that they ask you to pay, or if it's a flat dollar amount. I mean, they could do any one of a number of things. But those are things that can make an offer more attractive or less attractive. Now, something else that I'm going to turn the camera around at me for now, that I do too, is I look at, when I look at who the loan officer is and who the company is, because there are some companies and some individuals that don't do a thorough job with their pre-approvals. I mean, there are some companies that it's almost like when you get a pre-approval, it's like it's already gone through underwriting. I mean, it's very thorough because, folks, if you know, underwriting, that has the final yay or nay about whether the loan is going to get funded. So that's very important. So if you have a very thorough loan officer, when they give the pre-approval, you know, they've received all the documents. I mean, Joe, you can talk to the paperwork that you and
Yeah.
what you request.
Excellent point, Joe. If you are in the market for a mortgage or applying for a mortgage and someone is giving you a pre-approval and you didn't supply any paperwork, red flag.
Yep.
Huge red flag. You know, you have to do your due diligence. You have to make sure that, you know, the income qualifies, because sometimes, you know, a borrower will fill out an online application.
Mm-hmm.
That's only as good as the information the borrower put in there.
Right.
You know, and listen, the borrower is not a mortgage professional. It's
Mm-hmm.
not their job to qualify that application.
Right.
They're supplying the information. It's our job to go through it and to make sure it works.
Yeah.
So we're getting the pay stubs. We're getting, you know, if you're self-employed, we're getting tax returns. You know, even if you're not self-employed, a lot of times we get tax returns. You know, we're going to do the work up front so that, you know, later down the line we're successful. You know, and this is where we can identify the challenges up front too.
Right.
If we have to do any credit repair, right? So we can, you know, and I take a lot of pride in that too, where, you know, every single client that we talk to, we're going to send them a free copy of their credit report.
Yep.
Because we're going to try to coach them up. Even, you know, and if you get the 800 credit score to start with, hey, great.
Right.
You know,
Yeah.
we're not gonna fault you for that. Where, you know.
Yeah.
Yeah. But, you know.
Most of us don't have that.
Yeah. No,
You
they
know,
don't.
yeah.
It's just, they don't, and they don't teach the stuff in school, right, Joe?
Right.
I mean,
No, they don't.
You know, I mean, what the hell? Why isn't there a real life 101? Teach people about, you know, what a checking account is. Some people don't even know what a check is anymore. You know, it's Venmo or nothing, right?
Right.
It's like, you know, so just the basics, right? But you know, you just have to make sure that, you know, you're doing all of this work up front, so that when you get these people out there shopping for a home, God forbid too, you know, they get emotionally attached to these homes. You're in a contract, and then in the end you can't close. Could you imagine? It's just not. So just do the work up front, you know, and hopefully in the end, and then we'll have the opportunity too, because what we're doing now, we're seeing people don't qualify by themselves anymore, you know, so we kind of call it generational lending. Where,
exactly,
right, we got to bring in a parent or a brother or a sister.
Like in the old days,
Right, so, and it makes sense for these people too, because what are they going to do? Go pay $1,800 a piece for rent and live in 3 different places? And, you know, it's $6,000, you know, so buy something together and big enough and with an in-law situation or something. But in the pre-approval process, that's where we identify these things, if you're doing your job the right way, and set you up for success.
Yep. And that's important. Now, I know, you know, there are several different, you know, I just always like to say that, you know, mortgages, it's like cars. There are lots of different options out there to choose from, and you don't have to know what's available, but if you're working with a good lender, they can slot you into the appropriate mortgage product that may be best for your situation. If you're self-employed, or if you're, you know, you don't have a history with, you know, a lot of credit, and maybe, you know, maybe it's Freddie Mac, maybe it's Fannie Mae, maybe it's a conventional. Talk a little bit about, you know, the different products that you guys offer and how you customize that to the buyers.
Excellent. And I'm going to steal that, Joe. I like that. The car. I like
Yeah.
that because, you know, I've said it's like ice cream. You know,
Okay.
but
Right.
I'm going to go to car because, you know, ice cream in different flavors, cars and different types of cars, right? So you can't just, you know, shove someone into that, you know, whatever is going to work for you, right? You got to take their situation, and this is not just what I do. I didn't invent this. If a loan officer is doing their job the right way, this is what they should do. They should take the person's profile and, you know, find the different programs that are going to, you know, fit within their profile, and then just basically, you know, break it down to the client, and it's going to come down to, you know, 2 things: the costs, right, and how much is it going to cost me, and then how much is going to, you know, what is going to be my monthly payment, right? So how much am I going to need to close, right, and then how much am I going to pay monthly? Those are the things that we focus on, and to, you know, make sure, because there's down payment assistance program options, right? You know, if you're we'll give like the 2-minute mortgage 101, right? I'll try to 2-minute drill here, or even the 1-minute drill. Generally, there's 2 main types of mortgage lending, right? For residential mortgage financing, right? Residential.
Everything we're talking about has to do with the residential.
Yeah, for my specialty, definitely residential. We have some commercial options, but if I don't do it great, I'm not doing it. So, you know, so residential mortgages, that's all we do. We don't credit cards, bank accounts, nothing. You know, more residential mortgages. But the you get conventional lending, which is kind of the, you know, that's where you want to, you know, generally end up as a borrower, right? You want to, and that's your end game, right? That's where you want to end up, is with conventional financing. But a lot of times for first-time buyers, and for many home buyers, they need a program that's more introductory level. So that's going to be your FHA, right? Federal Housing Authority is what that stands for. And that's going to give you a little bit more leniency in terms of the percentage of income that they allow us to qualify you with. So you can have a little bit more purchase power, right? And also lower down payments, right? And for the down payment assistance programs, you can do either the conventional or the FHA. You can go either of those programs. But what is your profile going to allow us to do? So with conventional, a little higher credit score, a little bit more income, a little bit more reserves, assets, But with the FHA, a little bit more lenient on that stuff. So, which one's going to be better for you? That's what we got to do.
Now, question. So my kind of go-to, I go to a Mortgage News Daily when I quote mortgage rates because it's arbitrary. It's not, from a company, so to speak. And sometimes, so if you look at the 30-year fix, it's 6.62, okay, for conventional. And the FHA is 6.12, half a point lower. So if you have better credit and you qualify for a conventional, why would that rate not be lower?
This man knows his stuff, and that was a perfect meatball for me, Joe. I'll tell you.
Good.
I love it. I love it. That was a softball one. I'm knocking it out of the park right
Nice.
now. So you got to look at all the details, right? So FHA, while it may appear to be better with the lower interest rate, the mortgage insurance, right? PMI, if you ever heard of that, private mortgage insurance, and what that is, 2-second version. That's when you purchase a home and you don't put down 20%. You're going to, and with an FHA loan, regardless, you still have to have the PMI. But this is an insurance that the lender requires that you purchase on their behalf so that if you go into a default, this insurance cures the difference of what you owe and what they get for the home for foreclosure. That's never going to happen to you. Never going to happen to you.
Yes.
But, just like you have house insurance, car insurance, life insurance, health insurance, now you got mortgage insurance. It's just, and that kind of came out of the whole mortgage crisis too, where that was kind of the solution. There was mortgage insurance, but not the requirement like it is now. There were kind of hybrid programs where we could go to before, but with the mortgage insurance with FHA, unless you put down 10%, it's perpetual. It never comes off. So it's basically just part of your rate. So you're paying a half a point lower on your interest rate, but you got mortgage insurance, that number comes off.
When if you were to factor that in, that would raise the interest rate.
Your rate's going to be over what the conventional rate is.
Yeah.
So conventional rates on the, looking at them seem like they're higher, and they are higher, but you don't have those other costs that go along with them. So that's that. And then the mortgage insurance, if you have a high enough credit score, should be lower monthly and also go away. It'll go away over time. So with the conventional one.
And now the VA loan does not have the PMI, because and I always tell people the VA loan is a phenomenal product because they have more flexibility with credit scores. It's a no money down loan. You don't have to put money down, and you're still getting a low rate without the PMI.
It's my absolute favorite loan. It's my and God knows the men and women that have served this country, that's what they deserve it. And I always say to the people that are military folks that we work with that, hey, it's the one thing the government really did right for you guys. They got this right for you. Because it's great. There's 100% financing without any mortgage insurance. So that can be like $300-400 a month. Of a savings. And
the house has to be in better condition than it would for a conventional mortgage.
So they kind of hold the house condition wise to the same standard as a FHA loan. Which they're looking out for the consumer. They want to make sure that you're not purchasing something that's going to have safety issues, and it's nothing crazy, because we get realtors that pull back when they see a VA offer, and that drives me crazy. But but we see that, and they're also doing their job for their customer too, for their seller, and if you got a conventional offer with 50% down or a VA, I understand, but I've heard some realtors just pushing VA aside, and it's like, boy, that's not right, man, because it's not. It's and I'll tell you, all those veterans, if anything little came up on that inspection, on that appraisal, they'd probably go in there and do it anyway. But, not that we can be advising our clients to do that stuff.
No, definitely not. Definitely not. Hey, folks, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM, 1380 AM. Quick shout out to our sponsors, Compass Title and Escrow, Anthony Betancourt and his crew do an awesome job taking care of our buyers and our sellers. They do an awesome job handling them and identifying potential problems ahead of time. We also are proud to have G Metz Moving and Storage as one of our sponsors too. George Metz, does a great job running that company. They have employees. There are employees. Their workers work for them. They don't just hire them off of Craigslist or some temp agency. They work for G Metz Moving and Storage. Check them out, gmetzmoving.com. You can get a price quote or schedule a move at their website, gmetzmoving.com. Check them out. And then, of course, Vern Rainville, Public Insurance Adjuster, 484-300-8495. That's 484-300-8495. Vern is a licensed insurance adjuster, and he works for you, the property owner, not the insurance company. And he may be able to help you, even if your claim was up to 2 years ago. So give him a call, 484-300-8495. I've referred him to colleagues, clients, and everybody's always satisfied with the results from Vern. So getting back, we have as our special guest tonight, Joe Baptista, my Rhode Island accent almost slipped out there.
I like that.
Joe Baptista from Anchor Financial. And we're talking about mortgages, lending, underwriting, different mortgage products, PMI. How about if we talk a little bit about credit scores? Now, I've had Val Tridenti on here. She helps folks, improve their credit. So she's talked about that. What are the different, of course, I know the answer to this, but you can provide the answer from a lender perspective. There are some companies, we can do a 550, and then other companies can't go below 620. What is the determining factor, and how do some companies do it? And then most importantly, what does that mean? If they're going down to 550, what does that mean for the consumer or the buyer?
Right. Is this even a good thing if they can go that low, right?
Right.
Excellent question, Joe. And I've seen Val's work out there. She does a great job. So,
good.
Yeah. No, I've seen that name. But credit's important, and I tell folks, credit is it's a big piece of the puzzle, but it's not everything, but it's going to drive a lot of the, decision making to what we can do. And credit's like fixing a car, right? In order to figure out what you got to do, you got to kind of open up the hood and see what's underneath and see what you got to say. There's a car analogy for you.
Yeah.
Not quite as good as yours, but you got to see what you got to fix, what you got to tighten, what you got to, and a lot of times, 9 times out of 10 with credit repair, it's just a matter of paying down some debt. So sometimes it's not even that you've got, bad credit, that you've made slow payments. It's just that if 65% of your credit score is your balance in relation to your limit. So if you can just pay down those balances, sometimes that's all it takes to pop up your credit score. So, when it comes to credit, we're going to try to help you with, with repairing and stuff. I mean, as loan officers, we're not supposed to help with credit repair, they say. But listen, 30 years of doing this, I can't help but look at a credit report and say, hey, you do this, you do that, it's going to help you out.
And I always like to point out, what you look at on a credit report is different than what I find on one of the public websites.
Very good point. So that's a huge misconception too, is that when you see Credit Sesame or Credit Karma, we're going to be seeing the same scores, because we see something vastly different. Usually 30 to 40 points different. And why they do it this way, people always ask me. I think it's kind of because it's like, you got Wendy's and Burger King and McDonald's all competing against each other. I think it's kind of the same thing with these credit systems. They're all trying to have different algorithms slightly so that they can make one look better than the other. It does give you an indication, so I don't mind them, but don't go by that score.
Right.
But if you see that go up or down, you can know that your credit's also going up or down. So at least it can give you a barometer for what's going on with your credit. To answer your question about the types of scores that are necessary for the different lending programs, right? So for FHA, believe it or not, we can go down to a 500 credit score. 500. 500. Now, should everybody with a 500 credit score be getting a loan or a mortgage?
Maybe not.
Probably not, right?
Yeah.
And they're definitely not doing 100% financing at a 500 credit score. We're going to look to see, why that credit score is 500, right? So, and with us as being a broker, right, we work with lenders that don't have the overlays. So we do actually have lenders that will go down to this 500 credit score.
Okay.
So, like, if you go to like a Citizens Bank, I don't want to call anybody out like that.
Institutional
If
lender.
you go to an institutional lender, sorry, not Citizens, not you Citizens, sorry, I don't want to battle with Citizens, that's all I mean.
Right.
But you go to an institutional lender, they're going to have their, scope of products, their
they can only offer what they have.
That's all they got, know. And with us, we literally work with 30 different lenders, So if lender A doesn't have it, and what we look for in our lending partners are lenders that don't have these what we call overlays, where they're taking the base guidelines that either Fannie Mae or Freddie Mac or FHA will put out and add all these things to it. We want the base guidelines.
Mhm.
So 500 credit score, they'll go as low as that, but you're going to need to have at least a 10% down payment.
Mhm.
You know, so and it's got to be your own money, right?
Yep.
It's got to be, you know, or it could be from the sale of a home. But this is where we are seeing people, you know, so we just had one.
Yeah.
They had a 525 credit score.
Wow.
Because, you know, they bought a house back in like, you know, right before the things went crazy, right?
Mhm.
And they just racked up the credit cards like crazy. You know, they were
Yeah.
sitting on like $100,000 in credit cards. But they also had $200,000 in equity.
Oh.
So what we were able to do is to refinance their mortgage.
Yep.
You know, and luckily they got, you know, one of those rates before it was like, you know, it wasn't a 2% rate that
Right.
we were refinancing, but it was like 4.5. You know,
Yeah.
and they did go up on that rate, but you know how much they saved? $1,800 a month.
Wow.
$1,800 a month because they were paying.
Wow.
You know, and with those credit cards, it's throwing sand against the tide,
Yeah.
Joe.
Yeah.
They're not going to get anywhere ever.
Yeah.
So, you know, so here's where, because you say, well, should everybody with the 500 credit score be getting a loan? No.
Right.
But here's an example where they were paying the 4,800 it was before.
Yep.
I brought it down to the $3,000. You know, and their credit score was compromised because they had some late payments, but mainly because they were overextended, and there was no way for them to get out of this.
Yeah.
The way that they were, you know, so I call that the Fresh Start program. That's
Yeah.
the Anchor Financial Fresh Start program.
That's
So-
that's a
Yeah.
that's a very good point. Yeah.
Yeah. So so those are the examples where those lower credit scores come into play. You know, for conventional financing,
Mhm.
it's a 580 minimum.
Mhm.
You know, so they're not going to go lower than 580 for a conventional loan.
Yep.
And if you do a conventional loan at a 580 credit score, your rate's probably going to be 8.5%. Like, so a borrower that's got that kind of credit score, you got to look more to an FHA loan.
Mhm.
You know, because FHA looks at the credit score, but they don't really weight it heavily in terms of the interest rate.
Right.
So you can have the lower credit score and still get the decent rate,
Mhm.
but they're getting you with that mortgage insurance too.
Yeah.
So it's always
Now,
there's always
is it the same? Is the mortgage insurance the same? Does it differ if you have a 525 or a 625 credit score?
excellent question. So with FHA, no, it does not.
Okay.
But and that's what's wild about it is that you could and that's why the mortgage insurance is perpetual because
Mhm.
basically just classic American style, you're paying for everybody else's mistakes.
Yeah.
Right. So all this mortgage insurance money goes into this big giant pool,
Mhm.
and if the politicians don't take it for something else,
Right.
then it goes to when people default,
Yeah.
and that's what the purpose is supposed to be. It never goes away, so this pool of money builds up quick until these people refinance these loans. You
Yeah.
know, so so the mortgage insurance is there to to allow them to be able to have a larger default ratio so that they can lend to more people.
Yep.
So
Yep.
the goal is to put more people into houses. You know
Mhm.
that's what these programs exist for.
Yeah.
We want more home ownership, which helps the landscaper down the street, which
Mhm.
helps the plumber, which helps the electrician.
Yep.
That's what this country is founded on
Yeah.
is on home ownership.
Yeah.
And that's what makes this country great is that you can own your own home here in the
Yeah.
United States. A lot of places you can't own.
You
your
can't.
own.
And I was out with a friend of mine, a colleague today, and I was telling her how I had started out doing commercial real estate, and she goes, "Why did you switch to residential?" So I told her, the economy, Rhode Island wasn't attractive for a lot of the big companies, and I said, and I stuck with it because I find it really rewarding for when I'm working with first-time home buyers and they're buying their first home, or when you have folks that came to this country 5 years ago, 10 years ago, and now they own a home. And I don't care what country they came from before. If it was from Central America, South America, Asia, Europe, wherever it was, they never would have been able to buy a home there in that same time frame.
Not even an option.
No, not even an option.
Yeah.
You're just stuck paying rent,
Yeah.
forever. Or living with your parents until you're, 50, 60 years old, until your
Right.
parents pass on. So that's very rewarding for me. And I'd say it's like good for the soul when you're helping people like that,
It is.
because it's just, that's the best way to create family wealth.
It is. It's everything.
You know?
That's that, and you look at folks that that hadn't purchased
Mm-hmm.
because they thought maybe house prices are too high
Right.
back in 4 or 5 years ago, and then look at now they'd be sitting on $100,000 in equity probably.
Exactly.
So it is the greatest way to build financial wealth for your family.
Yep. Hold on, we've got a caller.
We got a caller.
Hello, caller. Sure. No, which of the, you've got two Joes here, so you want Joe the realtor or Joe the lender? Who do you want to talk to? Okay. All right. Yep. Yeah. Well, yeah, because you're more of a risk for the lender. Yeah. Mm-hmm. Mm-hmm. Mm-hmm.
Yeah. Annualcreditreport.com is the best one. Yep.
Yeah.
Good point, sir. Yep.
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 Mm-hmm.
Good for you.
Good for you.
Nice.
Mm-hmm. Yeah. Mm-hmm.
It's not a bad idea.
Yeah.
It's a
Yep.
good idea. Yep. Take control. Yep.
Yeah. Lock down that credit. Yeah. Mm-hmm. Yep. Yeah. That's ideal. Yeah.
I love this guy.
Yeah. Exactly. Yeah. Excellent. What is your name, sir? Jim. Okay,
Jim.
Jim. Jim, thank you
Great
very much.
call.
Great call. Great call. Take care. Bye
Thank you,
bye.
Jim.
Yeah, that was a great call.
It
You know,
was. You
and
brought
you
up
know,
a good point.
good
Yeah.
point.
Yeah.
Exactly.
Yeah.
So, and that's the thing. You know, credit is one of those things that you know, has to be respected, and it has to be. It's a tool, and you have to use it appropriately.
Right.
You know, not you know, you can't use a screwdriver to solve every problem. You can't use a hammer to solve every problem. Sometimes you need a saw.
Right.
And you know, credit can be the appropriate type of credit can be a good tool for the appropriate issue, whether you're buying a house, a car, or whatever.
It's good credit is important for so many things, Joe, and it's
Yeah.
not just for the home is obviously the biggest of them, right?
Yeah.
But you know, car loans and everything
Mhm.
else. You know, you see these people. I had a guy, you know, $823 car payment. I'm like, what is your rate? He's like,
Yeah.
20%. I'm like, oh my god,
Yeah.
it's because he had bad credit. You
Yeah.
know? So good credit is, you know, and it doesn't happen by accident. And
Mhm.
you got to work on it. You know?
Yeah.
But it's also not impossible. You know,
Right.
people think, oh, I forgot my credit is this, that. I think no, you got to work on it. And
Yeah.
I got a couple of hacks, you know, that I
Mhm.
can share. I'll share one. I'll
Absolutely.
share one nice credit hack for everyone out there, all our wonderful listeners. Authorized user. Have you ever
Mhm.
heard of this before, Joe?
Yeah. Yes, I have.
So
Yeah.
if you are lacking the credit depth, or even if you're just trying to pop up your credit score a little bit,
Mhm.
and I don't know how long this will stick around until the credit bureau realizes that people are using it like this. And
Yeah.
now that I put it on here on the radio, that's it. My it's gone.
Right.
It's gone. Now I've made it public. But no, I mean, if you have, you know, a family member that has a card that's got to be a good credit card. You know, 'cause
Right.
I had this happen once where, you know, I had a client add to a card that was not in good standing, and it had obviously the reverse.
Yeah.
Yeah, like it hurt him as much as it would help you. But you know, we've seen people go from no credit score to popping up to a 700 credit score.
Wow.
You know, with just adding to authorized user. Now, that's not going to be enough in the underwriting world because these underwriters are smart.
Yeah.
You know, they have to earn their money.
Yeah.
You know, they have to, you know, condition us for something because otherwise they can't earn their existence. So, you know, they're going to see that it's authorized user, but the score qualifies, and that's what, you know, the rate is based on when you're pricing out an interest rate, right?
Yep.
So, say the underwriter says, "Oh, this person's just cheating the system. They did all authorized user stuff." We might have to get what we call alternative forms of credit. So, like, you know, cell phone bill credit, you know, car insurance, you know, different things like that, just to show, you know, some other credit depth per se.
Yep.
But nice workaround with the authorized user stuff.
Yeah, that sounds
And it's,
excellent.
you know, and it can give you that little edge.
Yeah.
To kind of make it work.
Yep.
Yep.
So now we were talking before we came on air about, you know, interest rates, and interest rates today, even though they've bounced up a little bit, they're still lower than they were 6-7 months ago, even 3 or 4 months ago, I think.
For sure. Yeah.
You know, so what, from your perspective, what opportunities has that opened up for new types of business and what types of homeowners may want to consider reaching out to you for the,
for what's kind of the current environment. So 11 straight rate increases, Joe. 11 we
Wow.
went through, right?
Yeah.
4 years since there's been a rate cut. 4
Yeah.
years. People don't realize that. In 11 rate increases, it's like, okay, enough's enough. So, but the economy, it was necessary because inflation was getting out of control, right?
Mhm.
So you had to keep this stuff in check. So everybody kind of wants to blame this, that, or the other thing, but, ultimately, fiscal policy shouldn't matter for politics. It should
Right.
be, it should just be what the economy does is
Yeah.
what mortgage rates are going to do.
Mhm.
And if you want to be a real mortgage geek like me and follow
Right.
these rates, right, and like Joe, what you look to is the 10-year Treasury
That's right.
bill, right?
Yep.
So the 10-year Treasury yield, that's gonna govern mortgage rates, and that goes up and down, so do our mortgage interest rates. And we got that yield down to 3.61,
Mm-hmm.
just about 2 weeks, or like as soon as the word came out, or actually it was that August jobs report when that came out,
Yeah.
88,000 jobs. It boom, the yield went way down. We were fortunate to lock a lot of clients in at that time.
Yep.
Everybody that was in our pipeline at that time
Mhm.
all got locked, right? And
Yep.
and folks that we had locked somewhere else, we were able to actually move them to another lender. Lender A doesn't like that very much, but
Right.
Lender A also gets it all goes in a circle because what I took from my pipeline from Lender A, they got somebody else's pipeline too, so it all kinds
Yeah.
of kind of moves around.
Yep.
But in the end, the consumer wins, right?
Mhm.
We had clients that we had quoted at 6 5/8 that we were closing at 6 1/8 when the rates changed. And
Oh,
they were
wow.
just like, "Wow,
Yeah.
this is great! Wow!" And I'm like,
Yeah.
And trust me, Joe, I didn't have to do that for them,
Right.
But gets me referrals,
Yeah.
and that gets me my good reviews,
Yeah.
and that's everything. to me.
Exactly, and that's that's one of the benefits too of having been in the industry so long. You can see when the time is right to, what, Mr. Consumer, Mrs. Consumer, we need to lock this today.
Exactly, and that's what it is. I mean, when you see it, you got to grab it.
Yeah.
Because, and I'll tell you, we had a couple of days where there were 2 and 3 rate changes in the same day.
Mhm.
So it comes and it goes quick.
Yeah.
So you got to be there and you got to strike while the iron's hot.
Mhm.
That all said, it kind of softened a little bit since that low point that we had. The bond yield today was just over 4%. So
Mhm.
we lost about maybe a 0.5% from the lowest low that we got to.
Yep.
But it's still much better than it was, Joe. Thank
Yeah.
God. I mean,
Oh,
we
yeah.
were over 8% for a good part of last year. I mean,
Yeah.
just for regular loans, I was like, oh my God, these people. When I first got into business in 1994, rates were 8.75%,
Yeah.
9%, but you could buy a house for 150 grand.
Exactly.
It wasn't
Yep.
450,000 for a regular house.
Yeah.
So, just felt bad for people that it used to be where you could make $40,000 to $50,000 and I can qualify you to buy a house, to where now I have to make 70,000 to 80,000 just to get
Yep.
your foot in the door.
Yeah.
So
Yeah.
it's been a challenge, but
Yep.
I think you'll agree, as we see these rates come down, folks that are sitting on the sideline that, the house is 9 times too big or 9
Mhm.
times too small.
Yeah.
And they really should be moving, but they don't want, they're hanging on to that 2.625 rate.
Right,
They don't want
right.
to, I'm not leaving. They're not going to take me
Yeah.
out of here, dead or alive. But, but it just, life happens,
Yeah.
and that house is way too small or it's way too big and you got to do it. And when you can see 5 instead of 7 or 6 or 8, God forbid,
Mhm.
I think it stimulates the thing,
Yeah.
the market. It stimulates things to kind of start to move. So maybe we saw a little bit more inventory, a little pickup in inventory, nowhere near what we need.
Mm-hmm. Right.
I think 1,200 listens now, something.
Not
like
even
that.
1147.
Well,
So
yeah.
yeah.
So I mean,
Yeah.
So in Rhode Island, correct me if I'm wrong. I mean, we should have like 3,000 houses listed
Yeah.
usually, right?
All day
So
long.
I
Yep.
mean, so what's going on here?
Right.
1,200 houses, less than
Right.
1,200 houses. So
Yeah.
we need more people to stop worrying about the rates,
Mhm.
and check the payment too, because you'd be surprised because, you're sitting on a house that's got $200,000 in equity on it, right?
Yep.
And you're thinking, oh man, I don't want to, change in for something different, and my payment's going to be so much higher. You take that 200 grand, you put it down in the new house, and with these rates coming back into the 5s now, the payments aren't as crazy as they were.
Right.
So I think people are waiting, maybe going to hurt themselves because, if rates do come down a lot more and not more inventory comes on this market, what's going to happen?
Yeah.
These house prices are going to go even higher.
Exactly. And that's the thing, I mean, home prices this year in Rhode Island have increased by double digits, single family home prices. Multifamilies were in the high 9s. And that's when the interest rates were in the 8%. Those
Right.
the equity accumulation was at that rate. Now the rates are lower, so I think we're going to continue to see equity accumulation rates in the double digits, which is, we're kind of like an outlier compared to the rest of the country because everybody else, and they're in the usually low single digits right now, some mid to high single digits, but it's single digits. We're in double digits in Rhode Island, so we're in a very fortunate position that if you're a home owner. Now, one of the other things that we hear about is just credit. Like the debt is higher than it's ever been. So there are probably lots of homeowners that they may have an interest rate of 3% on their mortgage, but they may have $30,000-$40,000 at 25% interest on credit cards, and with the rates coming down the way they are right now, that may this is a question. It seems like there could be an opportunity there for these folks to refinance everything, like you just talked about, to save some money.
Exactly. So consumer debt, and it's no surprise because of the cost of everything. You go to the grocery store. I went to the grocery store this weekend. It was $300. I'm like, oh God, I got 2 bags of groceries. I'm like, what is going on? So consumer debt's at an all-time high. It's no surprise, right? So you're seeing people take advantage of their equity. So if you're fortunate enough to purchase a home at the right time, and now you're sitting on $100,000, $200,000 in equity, use that equity to refinance, or to another part of what you can do is to sell that home, pay off your debt, take the remaining money and put down on the new home too. So either way, you're able to clean your slate. You know? So use the equity. Stop paying these credit card companies 25%. My favorite saying, throwing sand against the tide. I just love it because that's what you're doing. You know? The tide's going to keep on coming in. Those bills, you pay the minimum credit card payments every month, man. Good luck. You're not getting anywhere. So whether you refinance, trade in the 3 for the 6, which or sell, take the equity, clean the slate, get to the house that's either bigger or smaller, what you need. It's a good time to do it, I think.
Yeah, because one of the things I try to point out to people is, listen, you're looking, is your objective to just pay as little interest as possible, or is your objective to live in a house that makes sense for you, that you can afford?
There's not going to be a gold star at the end saying, "Oh, hey, this guy, he paid off a 2.625% mortgage." You don't get a special spot in heaven for that.
No,
as far as I know.
Exactly.
But if you can have some comfort in your life, and listen, I'm not saying everybody out there should trade in their 3 for the 6. Trust me.
Right.
But if you have 50 grand or whatever, and 20% plus debt, what are you doing? It doesn't make any sense.
Yeah, no.
And in terms of what's going on here in the market, I think what's happened, Joe, and you may agree with this, everybody's found out our little secret here in Rhode Island. You know? You go to Boston and the surrounding areas, or you go to New York, God forbid, everything is just so expensive. Try to buy a multifamily house outside of Boston right now. You better have $1 million with you.
Exactly, I know. So we were talking about this weekend. Went up to my daughter's game, and then one of the parents, they live in Dorchester, and they had like a barbecue cookout for the parents and some of the players, and so we took the short drive to Dorchester from UMass, and what's happening there is all of the 2 and 3 family houses are bean converted to condos. And now you have what was a 2-bedroom apartment before that's selling for $500,000.
Imagine just an apartment. And you're so tied. I don't want to say it like that. I don't like these, but you're so tied to those other 2 owners. So
right.
I don't know. That just sounds like a lot of. It seems to be like what happens if the roof goes? I mean, you got to have arbitration agreements and stuff. I know, but somebody, one of those 3 owners don't do their part.
Exactly. You're up the creek.
And you're up the exactly. So I'm not a big fan of that stuff. But. You gotta look for a way that you can get into this market. You get somebody that's buying a house in was it Dedham? I think it is. This thing is like 600 square feet, Joe, and it's like $625,000.
Yeah.
So that's what I'm saying. Rhode Island here, I think everybody's kind of found our little secret. My office is in Pawtucket, right? You drive up and down Main Street in Pawtucket, you see all New York license plates and Mass license plates. It's like, why? Why are you all here in Rhode Island, in Pawtucket? What's going on? But the cost of living here is so much less, even at $1,800 a month, which we think is nuts.
Yeah.
You go up there and it's $3,000 a month for
That's
rent.
right.
And
That's
same thing for the houses. So so I think here in Rhode Island, I think we're going to be all right.
I think so too.
I think we're going to see a steady. It may not be as sharp as it's been here, but I'll tell you, the double digits, it could continue to happen. Because it's double just 45 minutes up the street.
Exactly, and interest rates are lower now than they were before. So now, Joe, we've been talking for a while, but what is the best way? I know anchorfinancial.com is your website.
Yes, thank you, sir.
And what's a good good way to someone
Yeah,
to reach
you
out
know,
to
I
you,
mean,
like social, the phone number, etc.
Yeah, absolutely. So yeah, we're on Facebook and Instagram, and I never did the TikTok thing. I don't think, but but we might have one. I don't even know.
Yeah.
Yeah, call the office. Anchorfinancial.com. We got some helpful, educational videos and
Yeah,
stuff
very
on
good
there.
site.
You get to see, my mug on there. I'll scare you away. But we got some informational stuff on there. But I welcome everyone to call us. Call the office. Easy number. It's 495-3100 is the office number.
Yep.
401-495-3100.
Yep.
And we're local. You can stop into the office right on the corner of Main and Lonsdale. I guarantee most listeners have driven by my building.
Yep.
It's a little brick building on the corner of Main and Lonsdale.
Yep.
That's me, the king of Pawtucket over there, Joe Baptista. That's it.
Yeah.
But I love my location. I've been there for, like I said, 25 years now.
That's amazing, man.
Right, I know. It's so, jeez, it went by so fast, Joe. It's
Yeah.
like a snap, man. But I love what I do. I love helping people.
Yeah.
I didn't talk at all about my office, right? I mean,
Yeah.
I've got the best crew that works for me too. I got
Yep.
an underwriter. I have an in-house underwriter.
That's important.
It's so important,
Yeah.
because when I need something, man, I just go to the next office, and
Yep.
this guy's the best in the business. He's the wizard. So
Yeah.
You got me, you got Chris, you got my whole crew. You got we love helping people.
Yeah.
So, yeah.
And it's a small building. It's not like a monstrous building, but
Yeah.
you guys, you do a lot of business. You crank out a lot of deals out of there.
We're the little engine that could.
Yeah.
We are. We are the little engine that could. People kind of sometimes get surprised at the volume that we do, and you know what it is, Joe? It's referral based.
Yeah.
It's because we work hard for our clients, so
Yep.
we get referrals.
Yeah.
And I take great pride in that.
Yep.
And
And that's it, folks. I mean, Joe gets he gets a lot of referral business from realtors, referral business from previous clients, and he has a stellar reputation in the industry. And I emphasize that because there are not a lot of stellar practitioners on that side. There are a lot of good ones. Okay,
a lot
but
of good ones, yes, definitely, yes.
but there are a lot of them are just mediocre, and you can't be mediocre when you're helping someone with the largest financial transaction of their life. So I want to thank Joe Baptista for coming to the Joe Luca Real Estate Show this week. If you want to reach him, the best number 401-495
3100.
3100
He had it. I didn't even
or
have to jump in.
anchorfinancial.com if you want to check them out. They're very tech savvy, and they can help you out. I just want to thank everybody for tuning in. We will be back next week, same bat time, same bat channel right here in WNRI. And if you have any questions, you can reach me, 401-409-5030. Everyone, thank you very much for tuning in, and we'll see you next week. Bye-bye.
Thank you.
Yeah.